Welcome back. Today's topic is correspondent banking. To begin with, let us understand the definition of correspondent banking. Well, correspondent banking is a bilateral agreement based on contracts between two banks, one providing financial services and the other receiving the financial services. The bank which provides the financial services is called correspondent bank, and the bank which receives financial services is called a respondent bank. Respondent bank approaches the correspondent bank as they do not have physical presence in those jurisdictions where correspondent banks have good hold and good reputation. Not only that, the respondent bank does not deal in the currency which correspondent bank deals in that country. Going forward, let us understand the kinds of services that a correspondent bank provides to a respondent bank. They are 1. Treasury services and cash management services. 2. Custodial services. 3. Credit or financing services. 4. International wire transfers. 5. Check clearing. 6. Foreign exchange services. 7. Processing documentation. 8. Managing international investments. 9. Cash management services. And 10. Fixed deposits. Going ahead, let us understand the type of account that a respondent bank opens with a correspondent bank. Well, a respondent bank opens a current account with correspondent bank to do its transactions such as wire transfer or check clearing. However, there is no restriction that respondent bank should not open a savings account with correspondent bank. It may do so if correspondent bank is paying good interest. In the books of respondent bank, the current account it maintains with correspondent bank is called as Nostro account. The correspondent bank in its book calls the same current account as its Vostro account. Nostro is a term derived from the Latin word for ours, and Vostro is derived from the Latin word for yours. You may note that the Nostro account is foreign currency account and Vostro account is the local currency account. Going ahead, a correspondent bank needs to do a complete customer due diligence on its respondent bank due to the main three reasons as mentioned below. 1. A bank cannot provide correspondent bank activities to another bank without first complying with strict due diligence obligations. 2. This is done not only for compliance with regulations but also as part of risk management requirements to ensure that the bank providing the correspondent services knows with whom it is conducting business. You may note that all the relationship opening with respondent bank will not mandatorily lead to high risk. The risk score of various factors also determine the risk score. 3. The risk profile will determine what reasonable due diligence or enhanced due diligence the correspondent bank will require to perform. Going ahead, let us learn the due diligence information that should be collected by a KYC officer of a correspondent bank to perform KYC of a respondent bank. The due diligence information that must be collected are as given below. 1. Regulatory status of the respondent bank. This requirement is utmost top priority requirement as correspondent bank will have a comfort zone if the bank it is tying relationship with is regulated and being supervised by someone in that jurisdiction. Usually bank's regulatory status can be ascertained by getting a proof from the central bank's repository or website of that country. The Bank of International Settlement site can be used to get the link of central bank's website. 2. Domicile information. This is the second most important requirement as the correspondent bank can decide whether or not to go ahead and do business with the respondent bank based on the information on geographic locations. The information of geographic location required from respondent bank is 1. The jurisdiction where the applicant bank has physical presence. 2. The jurisdiction where ultimate parent is incorporated and or headquartered. 3. The jurisdictions where its branches are located. 4. The jurisdictions where its subsidiaries are located. Going ahead, 3. Ownership and control. The correspondent bank not only has to know the reputation of the respondent bank but also the people who own it should also have good reputation in the market. The following information needs to be collected either publicly or from client if not available publicly. 1. If respondent bank is publicly held, whether its shares are traded on an exchange in a jurisdiction with an adequately recognized regulatory framework, sometimes also called equivalent jurisdictions. 2. If privately held, the structured chart or information on complete drill down till ultimate beneficial owner is known to the correspondent bank. You may note that the correspondent bank may want to write its rule of drill down based on the risk rating of the respondent bank. But, complete drill down is always recommended by the regulators. 3. If the respondent bank is formed by law, the statute or the law under which the bank was formed needs to be obtained. 4. If the onboarding entity is central bank, most central banks are government-owned but act autonomously based on their mandate or created through law. Hence, on minimum level the mandate or statute needs to be collected. You may also note, some major central banks today still have elements of private ownership, hence, this information should also be available with the correspondent bank. You may note that some central banks like the Bank of Japan and the Swiss National Bank are listed on exchanges, and the Federal Reserve is also part owned by the commercial banks that make up its body. Such information should be identified and noted in the KYC profile of respondent bank. Going ahead, 4. Controlling parties. The controlling parties' information of the respondent bank may include the members of their board of directors or supervisory board, executive committee, or its equivalent. Sometimes, the ministries, such as Ministry of Finance, may control the bank. The selected people who have maximum control over the bank management should be collected in such scenarios. 5. Type of businesses and customer base. The correspondent bank should know what kind of bank it is onboarding. Example, a commercial bank, a wholesale bank, an investment bank, or a global bank. Also, types of financial products and services the respondent bank offers to its customers, and depending upon the risk associated with the respondent bank, the geographic markets reached should also be collected. Let us learn some of the examples of types of businesses which are as given below. 1. Retail banking. Retail banking, also known as consumer banking, refers to the services banks provide to individual customers. Common retail banking services include checking and savings accounts, mortgages, credit cards, and auto loans. 2. Commercial banking. A commercial bank is a financial institution that accepts deposits, offers checking account services, makes various loans, and offers basic financial products like certificates of deposit and savings accounts to individuals and businesses. 3. Wholesale banking. Wholesale banking refers to banking services sold to large clients, such as other banks, other financial institutions, government agencies, large corporations, and real estate developers. 4. Private banking/wealth management. Private banking involves providing financial management services to high net worth individuals. Private banking provides investment-related advice and aims to address the entire financial circumstances of each client. Wealth management generally involves advice and execution of investments on behalf of affluent clients. 5. Investment banking. Investment banking is a category of financial services that specializes primarily in buying/selling securities and underwriting the issuance of new equity shares to help companies raise capital. 6. Transactional banking. Transactional banking is a specialized bank providing treasury services and product offering that includes cross-border payments, risk mitigation, cash management services, trade financial deals. These services enable safe cash and securities transactions around the global financial framework. 7. Custodian banking. A custodian bank, or simply custodian, is a specialized financial institution responsible for safeguarding financial assets/securities such as stocks, bonds, commodities, and foreign exchange. 8. Broker/dealer. A broker-dealer is a bank that is in the business of buying and selling securities for its own account or on behalf of its customers. Development banks are financial institutions that provide long-term credit for capital-intensive investments spread over a long period and yielding low rates of return, such as urban infrastructure, mining and heavy industry, and irrigation systems. Going ahead, the correspondent banks should and must know the customer base of the respondent bank, meaning the type of customers the respondent bank is giving services to. Examples include but not exhaustive, are as given below. 1. Retail customers, 2. Corporates, 3. Financial institutions, like banks, insurance companies, or brokerage firms or finance companies, etc. 4. Funds, such as hedge funds, private equity funds, mutual funds, etc. 5. Non-profit organizations or charity foundations, 6. Societies, 7. Third-party payment processors, 8. Clubs and casinos, 9. Arms and ammunitions firms, 10. Money services businesses. Going ahead, 6. Customer visit certificate. The correspondent bank can collect this information through any of its representative who must have visited the physical location of correspondent bank and has collected detailed information of the departments and key personnel working there. This is the most important check, as this is the only genuine proof the correspondent bank has that the respondent bank is not a shell bank. 7. Anti-money laundering controls. The correspondent bank should and must collect the following AML-related documents mandatorily to know the AML controls that the respondent bank has in place. 1. Wolfsburg questionnaire. 2. Copy of the AML policies and procedures. 3. Copy of the USA Patriot Act certification, if applicable. 4. Name and contact details of the respondent bank's compliance officer. Next is 8. List of Nostro accounts. If applicable, this information is collected by the correspondent bank for 2 main reasons, which are as given below. The respondent bank is already known about the conduct towards its account with correspondent bank. And 2. Is there any chance of nested accounts? This information can be collected through Banker's Almanac or directly from customer. Next is 9. Financials. The details of the financials should be obtained from the latest financial statements or annual report. Most the correspondent banks collect the details of assets and revenue. 10. Source of wealth. The major source of wealth of banks are usually updated in its website. The same is also available in Banker's Almanac. The sources of funds examples are primarily deposits, borrowed capital and shareholders' funds, etc. 11. Expected activities. Expected activities in each of the transactional products that respondent will use should be collected. This collection helps to conduct expected versus actual analysis during periodic review of the bank customer. 12. Signature mandate. Going forward, the following details should be collected if the correspondent bank is offering transactional products to its respondent bank. 1. Purpose of account. 2. Estimated volume of transactions. 3. Estimated value of transactions. 4. Jurisdictions of transactions. 5. Type of fund transfers, which majorly are cash, check or wire transfers. 6. ACH estimates. Let us go ahead and learn about some of the important products and services that a correspondent bank offers its respondent bank. The list goes like this. 1. Treasury services. The correspondent banks under Treasury Services extend solutions such as liquidity management, payments, foreign exchange, receivables management, trade services, and escrow accounts. 2. Documentary services. Documentary services includes letter of credit or standby letter of credit and bank guarantees. 3. Asset management services. Asset management services includes investment advisory solutions, custodial services, transfer agency and fund accounting services, administrator services. 4. Wealth management and brokerage. These services include prime broker and executing broker services, private banking services, wealth planning solutions, investments and lending services. 5. Credit services. Credit services includes interbank short-term loans, loan syndicate IONs, collection and payment of credit instruments, bills of exchange, etc. 6. Payment services. Payment services include checks clearing, including clearing cash letters, issuing of drafts, and ACH and wire transfer services. 7. Cash management services. Cash management services include collecting payments, disbursements, covering shortfalls, forecasting cash needs, investing idle funds. 8. Foreign exchange services. Forex services mainly involve currency exchanges and currency trade services. Going ahead, let us look at the public documents which can be collected instantly while onboarding any respondent bank. 1. Annual report. The following information you may get from the annual report: A. Address of head office. B. Details of incorporation. C. Details of listing. D. Details of subsidiaries. E. Details of branches. F. Details of customer base and type of businesses. G. Ownership and controlling party information with biographies, if available. H. Information of governance structure of the bank. I. Products and services the respondent bank provides to its customers. J. Auditor details. K. Financial statements, especially assets and revenue. The annual report of U.S. is Form 10-K. This is similar to the annual report submitted by public companies in U.S. Hence, public banks will have certain information as given below: a list of subsidiaries available in Exhibit 22 inside 10-K form. B. Proxy statements having ownership details. C. Other details as listed in annual report. 3. Banker's Almanac. Banker's Almanac collects most of the information that is required for onboarding a bank. The special requirements which are available in Banker's Almanac, probably not available in any other sources, are: A. Size of the bank. B. Spread of the bank. C. Copy of banking license or equivalent document. D. List of Nostro accounts. E. List of bank branches with addresses. F. Bank's head office address. 4. Bank of International Settlement site which contain list of websites of central bank. 5. FDIC Bank Find which contains the details such as locations, history, identifications, and financials of U.S. banks are available here. 6. Beta Company House. The details of filing history and officers for all UK banks are available in this site. 7. Thomson Reuters Avox data includes corporate hierarchies, registered address information, industry sector codes and company identifiers. 8. Certificate of incorporation is available in respective company registries. Just Google with say Hong Kong Company Registry and you get the site details. The Certificate of Incorporation of Companies or Banks for all states in U.S. is available in e-Secretary of State site. Going ahead, let us know the important screening observations that an officer should look into while doing KYC screening for respondent bank. They are: 1. Negative news. The bank and banking corporations usually have too many negative news including fines, penalties and insider trading practices. However, this news should be seen in the light of present reputation of the bank in that country. You may also consider bank's financial strength, customer base, and width of businesses while assessing negative news analysis. 2. Politically exposed persons. Banks usually have controllers who are PEPs. While doing screening, the officers should look at the designation of the officer and wherever required, should ask its respondent bank whether the directors or chairman in question are having complete hold on the bank or bank-related operations or not. 3. Sanctions match. There can be indirect relations of the respondent banks with sanctions jurisdictions which are often come in light during screening. The sanctions team should make proper recommendations to the onboarding officer during onboarding. Going ahead, let us learn what should be available in the AML Risk Summary of a respondent bank. It should minimum contain the following: 1. The mention of high-risk products offered to the clients such as ACH or lockbox. 2. The mention of high-risk geographies where the bank, branch, or its subsidiaries have presence in. 3. The mention of respondent bank's customers who are deemed to be of high risk in nature such as a money services business. 4. Mention of any offshore banking unit that the bank may have. 5. Any sanctions-related hit or association. 6. Any negative news or PEP involvement in the profile. 7. Any high-risk services or products offered by the respondent bank to its customers. 8. Any associations found with offshore centers or secrecy havens. Going ahead, let's understand the risk factors with respondent banks which will decide its risk score. The correspondent bank needs to take risk-based approach while and also after onboarding the respondent bank and consider the below risks for risk calculations. 1. Customer risk factors. correspondent banks should consider the foreign correspondent bank to be a high-risk customer type. 2. Ownership risk factors. Ownership structure such as complex ownership structure or cyclical ownership and banks issuing bearer shares should be looked into while calculating risks. 3. Country or geographic risks. Country risks such as countries with inadequate AML or CFT systems, countries subject to sanctions or embargoes, countries involved with funding or supporting of terrorist activities, or those with significant levels of corruption. 4. Product and service risks. Respondent bank requiring high-risk products. 5. Transaction risks. Respondent bank does high volume or high value or both high volume and value of transactions. 6. Delivery channel risk. Delivery channels include private banking, anonymous transactions, and payments received from unknown third parties. Going ahead, let us understand the questions that should be asked while performing enhanced due diligence of a correspondent bank. 1. Does the respondent bank gives nested or downstream correspondent banking services? Well, nested or downstream correspondent banking refers to respondent bank giving access of its Nostro account to its banking or financial institution customers, enabling them with varied services of correspondent banking without opening an account and without having to go through the cumbersome onboarding process at correspondent bank's end. 2. Does respondent bank allow payable through accounts to its customer? Payable through accounts, also called pass-through accounts, is the usage of Nostro account of respondent bank, directly or indirectly by customers of the respondent bank, which are usually the corporates or any structures which are not financial institutions, to do transactions without having to go through initial checks at respondent banks, such as clearing their own checks, do wire transfers and ACH transactions. These transactions can be done directly or through maintenance of sub-accounts at respondent bank. 3. What are the list of Nostro accounts? List of Nostro accounts is respondent bank's account maintained with other correspondent banks in other foreign currencies. 4. Size of the bank. In terms of global presence, what is the size of the bank? This information is made available in the Banker's Almanac. 5. What are the number of branches and subsidiaries and their location information of the respondent bank? Going ahead, let us learn the product features of the respondent banks which correspondent book should know and monitor, from time to time, as they are risky. Below are the product features offered by the respondent bank which correspondent banks should know and monitor. 1. Private banking. 2. Offshore international activity. 3. Wire transfer and cash management functions. 4. Transactions in which the primary beneficiary is undisclosed. 5. Loan guarantee schemes. 6. Deals with travelers' checks. 7. Deals in foreign exchange transactions with other correspondent banks. 8. International remittances and have branches in other countries. 9. Payment services, prepaid products, automatic clearing house. 10. Remote deposit capture. 11. Trade financing transactions with unusual pricing features. 12. Payable through accounts and nested accounts, if any, being operated via other correspondent banks. Further, drill down of private banks are somewhat easy if there are no multiple layers and there is only one group or parent company being the beneficial owner whose details are available in the public search. In case there are multiple layers, follow the corporate drill down which is explained in detail in this channel. I have given the link in the description bar. Usually, the banks are publicly traded, hence, float needs to be calculated. How to calculate the float details are also given in the corporate drill down video. After calculating the float, if there is some residual percent still left, the KYC officer should ask the details of the residual percent from the respondent bank's representative. Example, public float is 89% and the risk rating of the bank is high risk, threshold 10%. In such a case, the remaining 11% details should be asked to the respondent bank's representative. If the risk rating of the bank is medium, then further drill down is not required as the threshold is 25%. The relevant listing proof should be obtained and recorded in KYC platform in the bank. Further, for government banks, the .gov printout of the bank is sufficient along with the law or statute recorded in the KYC platform. The name of the government ministry or the government itself should be mentioned under beneficial owners, however, they are not required to be screened. Further, let us see the documents required by KYC officer to onboard a respondent bank. Under Domicile and Organization Information, the KYC officer will collect the following information: 1. Certificate of incorporation, 2. Current banking license, 3. Address of the head office if applicable, 4. Details of any subsidiaries, if relevant, 5. Details of the applicant bank's group structure, if relevant. Under the ownership and executive management details, the KYC officer will collect the following: 1. Copy of the applicant bank's latest annual report, 2. Names and brief background of key personnel, Board of Directors, Chief Executive, Chief Financial Officer and Chief Operating Officer, 3. Information on the ownership of the applicant bank, including names of any stock exchanges on which it is listed, 4. Information on corporate governance including articles of association or company bylaws, 5. Name of the external auditor. Under the types of businesses and customers, the KYC officer will collect the following: 1. Overview of the products and services the applicant bank provides to its customers, 2. Overview of the applicant bank's customer groups. Under Regulatory Status and History, the KYC officer will collect the following: 1. Name of the applicant bank's regulator for banking and prudential matters, 2. Name of the applicant bank's regulator for AML matters. Under the anti-money laundering controls, the KYC officer will collect the following: 1. A completed copy of the Wolfsburg questionnaire, 2. A copy of the AML policies and procedures, 3. A copy of the USA Patriot Act certification, if relevant, 4. Name and contact details of the applicant bank's compliance officer. Going ahead, the money laundering risks of correspondent banks are: 1. Jurisdictions with lax AML controls. Certain jurisdictions where respondent bank reside are internationally recognized as having inadequate anti-money laundering standards, insufficient regulatory supervision, presenting greater risk for crime, corruption, terrorist financing, or pose elevated risk of evading sanctions. 2. Shell banks. Shell banks do not have physical presence and is usually created to transfer criminals' ill-gotten funds. It is possible that such a shell bank may enter with a correspondent banking relation. 3. Payable through accounts. The danger of payable through account is that the company which gets access to Nostro accounts of its local bank can be a criminal-held company. Hence, usually a declaration is taken from correspondent bank with respondent bank that the payable through account customer's profile has gone through complete due diligence at respondent bank's end before PDA is operational. 4. Nested accounts. The danger of such relations or nested account is that respondent's customer bank has relations with criminal companies and these criminal companies are indirectly using correspondent banking accounts to clean its money. 5. Customer's customer. The problem with correspondent banks is that it has no control on the customers of its respondent banks and purely depends on its respondent bank's procedures of due diligence. There's where the chances of ML is more through correspondent banks, as correspondent banks do not have direct control over its respondent bank's customer. Hence, correspondent banks should not only monitor the activities but have minimal data on the types of customers, amount of activity and other data of customers of its respondent bank. 6. Screening criteria. Screening of customers is usually done at respondent bank's end and hence, there is a chance that money launderer escape basic screening checks of negative news or bad peps even relation with sanctioned countries. Hence, correspondent bank should set up basic screening criteria for flagging potential risky transactions of its respondent banks. 7. Relationship with money service business in high-risk countries. There is a possibility that respondent bank is clearing transactions of its relationship with a money service business operating in a high-risk country through correspondent banks. Hence, correspondent banks should monitor regularly the volume and value of transactions and on whose behalf the transactions are being done. 8. Payment stripping. Payment stripping is the practice of removing or substituting information contained in payment or trade finance instructions in order to prevent association of the transaction with a sanctioned entity, person or corporation or country. 9. Reference numbers. In making payment, use of an internal reference number identifiable only by the respondent bank to enable hidden transactions from high-risk countries or countries under sanctions or transaction on behalf of criminals. 10. Swift Message Text 202. Employ a Swift Message Text 202, which is a bank-to-bank transaction cover payment message instead of an Message Text 103, a customer-to-customer transaction, as the Message Text 202 would not need to include the originator nor beneficiary information. 11. Letter of credit. A back-to-back or transferable letter of credit is employed in order to hide the main beneficiary and make the transactions genuine. 12. Structuring. Lots of little transactions over a period of years across multiple channels and counterparties are extremely difficult to identify using rules engines versus a few big and highly visible transactions. 13. Sanctions risk. The respondent banks may have indirect relations, in terms of respondent banks having subsidiaries instead of branches or operating through special purpose vehicles in sanctioned countries, in the countries which are OFAC sanctioned or sanctioned by any other agency such as World Bank or European Union. 14. Risk and controls. The correspondent banks are not aware of policies and procedures of risk mitigation procedures and internal controls put by the respondent banks. That's all for today. Thank you. Hope you all now have a fair idea about the correspondent banking and you may now apply this knowledge to your day-to-day work. Have a nice day ahead. Stay tuned.